Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep.
Oh, jeez.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. We have Spencer Israel dealing with a little hit and run on his car this morning, so hopefully he'll be joining us later in the show. We got a lot to talk about today. We got the S&Ps, the biggest one-day turnaround in almost a year and a half, going up. Double, triple digits to down on the day. We can talk about some earnings, Bed Bath & Beyond reports, as well as Fred. But let's bring in the master of disaster, Dennis. How you doing today?
Okay, let me know if your stream's working. It's not working on my end, but if it's working on your end, we'll run with it. So I'm just refreshing the page, and I'm not able to get it. So let us know. I don't think we're up and running here, though, Joel, because I'm refreshing the page, and I'm not getting the show up here. So Joel's still trying to work with it here. We're working because Spencer is away here this morning, so I do not think we're up and running, though.
Okay. All right, I'll start it again.
Joel, it's just that little weird thing that it does.
Well, Chris is showing it.
So this video is unavailable.
Okay, I gotta get out of my email here.
No.
I mean, I see it up here.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
No.
With everything you need to start your trading day.
Still not working, right? Dennis? Still not working?
I don't see it working now. It's nothing changed. It's just that little stupid sign that says video is not available when you click it.
We had it, and I signed into my email, and I lost it.
Do you know his sign-in?
No.
It has to be his, eh?
Yeah, I get. I signed out of this account. I gotta sign out of everything. I don't know. We'll figure it out. I'll talk to you a little bit. Okay, Dennis,
Yeah.
it's showing up now, right?
Let me see.
Should be showing up now.
Yeah, it's showing up now.
Okay. All right. I'll
We're
just.
going.
Okay. All right.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I will buy the stock for a penny.
with everything you need to start your trading day.
Good morning, traders and investors. A little late here at 8:12. Welcome to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, and we are over the technical difficulties here. Mr. Spencer Israel is dealing with a hit and run on his car, but hopefully he'll join us later in the show. Dennis, we only have 3 minutes here to our first guest. So, first of all, let's just talk about the big turnaround in the market yesterday, being up one of the biggest one-day turnarounds we've had in quite some time. Any comments? You think it was the Fed that did it?
Yeah, well, it all started after the Fed minutes. It happened immediately, though, and I think, people just getting nervous there, and they were coming in and taking profits. And if you look, the financials were all trading strong right up until that 2 o'clock Fed minutes came out. Bank of America fell 2% after that. JP Morgan, Morgan Stanley all fell off a cliff just on those Fed minutes there. So that was your catalyst there. I'm still fighting this cold. Sorry about that. So, and obviously a lot of other stocks, profit taking in stocks like Amazon, Google, Netflix, all of them just falling off a cliff after 2 o'clock.
All right, I'll just we took out the low from yesterday, but we couldn't get quite through that 23.40 low. So this will be an important day. See if we can take out that 23.38 level up to 23.50. That's your pre-market high. Any movers? You want to highlight one mover here before we go to our first guest?
Sure, let's jump over. Jazz Pharmaceuticals is one of your big movers here today. It's trading up 10 points here in the pre-market. Jazz, they settled this patent lawsuit on Xyrem, I guess that's a drug, with Hikma. And I guess the settlement is good for Jazz here, at least, because the stock is getting a nice lift on this. So something that was weighing it down, they've settled that. I think they're going to get royalties from Hikma. They're selling the generic version of it as well. So that's why Jazz up 10 points here this morning. Separately, Mizuho is downgrading the stock, but that's not taking any steam off of it because it's already trading up 6.5%.
All right. Well, 150 and a quarter. That's your pre-market high, and you're still trading right there at 150 even. So important to take out that pre-market high for continuation. If you go to the dailies, this is just a big level. We haven't been up here since August. Just above that, you can see in the 151.5, 152 area, you got 3 or 4 highs. So we'll keep on that. If you could get some follow through that 150 and a quarter pre-market high. Well, what do you know? It's already 8:15. It's time to bring on our first guest of the day, and that's Matt Hogan. He is the co-founder of Finbox.io. We'll be right back with him. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, and we have Matt Hogan on the line. He is the co-founder of Finbox. Matt, how you doing today?
I'm doing well. How are you guys doing?
Good. So you lead marketing and overseas operations as well as customer success in Finbox IO. Tell us, first of all, before we go into your company, tell us a little bit about your background.
Yeah, so I worked for a boutique investment banking firm in Chicago for about 4 years before founding Finbox IO, and we specifically focused on valuation work and fairness opinions in connection to stock acquisitions. So a lot of valuation background, building a lot of different types of financial models in Excel. So that's the kind of the short version of my background.
Okay, all right. And so now here you are, you're co-founder of Finbox. Tell us about the platform.
Yeah, so we're an online stock research platform that offers a variety of fundamental investing tools. Put simply, we help investors discover what price they would be willing to pay for a given stock. So we do this by having the largest repository of pre-built financial models on the web. So we build over 100,000 financial models every single day, such as a discounted cash flow analyses, comparable company analyses, dividend discount models, and so forth. So one of our more popular features on the site are our stock fair value estimates, which are derived from all of our pre-built valuation models. But generally, members love our site because it's super simple to use, and they no longer have to waste a bunch of hours in Excel themselves building valuation models.
Okay, and so is this designed for anybody? Is it individual investors, asset managers? Who can make use of
Yeah,
this?
yeah. So it really is just about anyone who wants to get a better understanding of the stock's fundamental value. Right now, the majority of our members are self-directed investors, so that includes individual investors as well as financial advisors and asset managers. But really, we've seen a lot of millennials and as well as students kind of take to our platform when trying to really understand, what they're investing in, what price they want to pay for a stock, monitoring stocks that they might be interested in, and when a stock drops to a certain price, maybe they want to pick it up at that level. So, it really we really have a variety of members on our platform.
All right. Now, I also see here that you have some functions relating to stock acquisitions and building valuation models to help clients determine an asset's fair value here. So, did Panera Bread pop up on your radar a few days ago and alerted your investors, or tell us how that portion of the program works?
So we do have some alerts that we send our members related to earnings and so forth. Panera Bread is actually definitely, as I mean, you guys have been covering, has been just on a trajectory of just continuously upward momentum until the buyout. That fundamentally is kind of looked attractive and unattractive at certain times. So we hadn't been sending notifications on that, but definitely the buyout was welcome news to investors for sure.
All right. So does this, based on the sector, does it help you search other restaurateurs that have a similar setup, or is that beyond the scope of the program?
No, so I mean, so they can do what they want to do with our tools. We actually have a stock screener included on our platform. So if our members want to look specifically for restaurant stocks, you can search for that sector. And what you can also do is search and screen through our fair value estimate. So if you want a quick view of some stocks that are fundamentally attractive based on our underlying cash flow analyses and ultimate fair value estimate, you can easily do that through our stock screener by just easily adjusting some of the filters to restaurant stocks. yeah, it's a pretty simple process, and it's really intuitive, and our members have seemed to really take to it, which has been great.
All right, and just tell us about the pricing. Is there free trials?
Yeah, so it's a typical kind of freemium model. So our members will sign up; they get a free 14-day free trial, and upon which, after they can either decide to join our premium membership at about $39 a month or $300 a year. And then if they decide not to join our premium subscription plan, they'll still have access to our free features. So they'll have access to our financial models. They won't be able to download the models to Excel and so forth, or have access to our fair value estimates and our stock screener. But they'll still be able to take a look at all the models, as well as monitor their stocks with our smart watch list.
And who would you say, do you have any competitors out there?
So there's no one really doing specifically what we're doing. But yeah, there's some that, Y charts is, it's a bigger one, but Simply Wall Street is probably the closest competitor that we have. In terms of their models and their platform is a little bit more focused towards kind of visuals, while ours is kind of more based towards the underlying fundamentals and the numbers of the company. But yeah, Simply Wall Street's probably the closest.
Okay. All right. We've been on the line with Matt Hogan. He's the co-founder of Finbox, giving us a way to look at stocks, analyze them from a fundamental point of view. Matt, thanks a lot for coming on, and we'll talk to you again soon.
Yeah, thanks, guys, for having me. Appreciate it.
All right, here we are at 8:24 here this morning. S&P futures trying to stay green on the session. Let's take a look at the S&P, see how they're trading. 48 and a quarter, that pre-market high at 23.50 and change, just hanging in there. Let's see if we can get through that level. Could be quite a bit of green on the upside if we can take that at. Dennis, our engineer, Chris, may have figured out that echo. You want to come on back here?
Yeah, hopefully the echo is gone now, so let us know if you can hear me clear in the chat. We know we had a little bit of an echo on me there, but we got the background Benzinga team working on that, so hopefully it's fixed. Individual stocks, let's jump into just the earnings parade here. There was a few stocks to talk about there. We don't have Spencer Israel here today, so I'm going to have to go jump into the pro and get you the actual numbers, but let's start with Bed Bath & Beyond. BBBY, the triple BY, not the Best Buy, Joel, because yours put two Bs. It's three Bs. They have a whole pile of Bs in there. Reported there last night. They reported $1.84 versus $1.77. The sales were in line at $3.5 billion. They see fiscal year 17 decline in EPS low single digits to the 10% range, so fairly significant. They did hit the stock on that initial earnings, but then they started bouncing it back. And maybe it's because the stock was already weak going into the report. It got hit even yesterday. It was down almost 2 points heading into the report. So a lot of people may be expecting, with the weakness that we've had in the retail sector, that Bed Bath & Beyond wasn't going to blow it away. And they did increase the dividend as well from 12 cents to 15 cents. So fine news is buy because it's up a buck now. But talk about the after hours action there in triple BY, Joel. Joel, you might be on mute.
Did you get it some action in that first bar? 36.74 up to 40.81. Huge trading action in here. Now settling in here at 38.88. Man, this stock's just been weak, and I don't know if this is a good enough report to get it off the mat. Made a low yesterday at 37.28. Went off the board at 37.80. I did notice here a pair of highs. Just above 39 here at the 39.30, 39.40 level. I think even if, in fact, you could get through that, 40 just looks like a brick wall. Two highs there from earlier in the late in March, and then also earlier in March. So there's a couple levels to keep an eye on here in Bed Bath and Beyond. Dennis, we have about another minute or two here before we bring in our next guest. I know we have it at echo, but let's just try and work through it.
We're trying to work through the echo there. Benzinger working on in the background. YUMC reported last night 44 cents versus 38 cents. Sales 1.28 billion versus 1.27 billion. Comps were up 1%. YUMC actually never looked back after this report. It started spiking and it continued to spike. The stock is now trading in the pre-market up almost 11%, actually over 11% here now. Trading at 31.31. It's a breakout for Yum China.
They must be eating a lot of Taco Bell and Pizza Hut over there. 32 even, and that's your pre-market high. Holding in here at 31.31. Let's look on the daily charts and blows. Let's see. Can't even find anything on the dailies. You had a high in November at 30.27. Let's look on the weeklies. This thing has not been out very long, so a major breakout here. Maybe if you pull back to 30.37, that could act as potential support. But right now, just up and away here in Yum China. All right, folks, 8:30. We're going to have our 8:30 guest instead of an 8:35 guest, and that's Chris Bertelsen. He is the portfolio manager with Allianz Capital. 37 years of investment experience. We'll be right back with Chris. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. And we have Chris Bertelsen on the line, portfolio manager with Allianz Capital. Chris, how you doing this morning?
Very well, thank you.
All right, 37 years of investment experience, okay? So that puts you in there in the major veteran category. Just observing the trading action from yesterday, I know we've seen some volatility over the years, but when you see a market go from triple digits up to triple digits down in one session, what kind of memories does that bring back for you or any kind of stories from your many years on Wall Street?
Sure. No question. Previously, all the other sessions we've seen where we've had down openings and then it climbs back means there's buyers underneath. I think yesterday you just described it to nervousness in a vacuum. I mean, you had enough news out there to make people skittish about things and about the Fed and about the meeting with the Chinese premier. So I think that combination was more than the market could handle. We're in that period of time right before earnings. I mean, other than Best Buy that came out this morning, Bed Bath & Beyond that came out this morning, there's not much until next week. So I think that it's pretty easy for this market to get distorted.
And do you think it's maybe the street just waking up? I mean, from my years of experience learning about the markets, pretty much, direct direct effects in interest rates. Interest rates going up are supposed to be historically bad for the market, but what's happened here is that just seems to be ignored, and that's kind of under since Trump's been elected. I mean, do you think we could break conventional wisdom here?
I think you're absolutely right. I do think we break it, and here's the reason why. It's going up from such low levels. I think as we make a slow march to normalization, other than long duration investors, I don't think anybody is going to be seriously hurt in this process. If you want to stay in durations of more than 3 years in the bond market, you might regret it. But I think certainly for equities, and look at the periods of times we've had rising rates. I mean, even the rates in the late 70s, you saw it. You didn't see too many other because we had a 34-year rally in bonds. But you look at the small periods of time like 94 and whatever. At first it was and then the market seemed to adjust to it. Now, if you told me it was going to 10%, I'd say that would be a little more difficult.
All right, so we've had a big boost here in the financials. I have the chart up of the XLF ETF, the financial. Now, I mean, we've just gotten a huge boost in this, and a lot of it is anticipation of higher interest rates. In your opinion, has the rally in the financials really warranted based on how much interest rates have gone up?
I think it's warranted, but I think you have to add in the other factor that they're anticipating. I mean, the market is a great discounter. Regulation changes, especially for the big banks. I think that KRE, the small bank, if you look at that index, ETF, you say it too has had an equal move, but those stocks haven't done anything for a long period of time. So I wouldn't get too impatient about financials. The low-hanging fruit, yeah, that's gone. But I think there's further to go.
All right. As everyone knows, we're a global marketplace now, and what happens across the pond and in Asia has a dramatic effect on our markets here. Let's talk about the changes in China from an export dynamo to consumer consumption machine and the possible implications for the U.S. markets.
Well, I think, we've seen this movie before, and that was Japan. I mean, we forget that Japan, of course, after World War II, started as an exporter of cheap goods, and then eventually it became itself a consumer economy. And I would say that China is certainly attempting the same thing. There's some real opportunities still in China as it makes its change, and it has to make its change because you can see right now, Philippines, Vietnam, you can pick other places where they're lower cost producers from an export point of view. So they're forced into it. But certainly if you own the four horsemen of the Chinese internet, you're going to be the same position you would be in the U.S. of owning Facebook and Google and eBay and whatever 3, 4, 5 years ago.
All right, and so you consider those four horsemen, Tencent Holdings, Baidu, Alibaba, and JD.com?
I think that they've got more to run. I mean, watch what they're doing. I think you've already seen some push finally this year. They did nothing and sat around for a good 12, 18 months, and now they've gotten a bid behind them. And I think it'll continue to move that way. And versus their American counterparts, they're cheap. Not that, I don't think Amazon's good to buy. They're cheaper, though, if you looked at Alibaba.
And do you have a favorite out of those four?
I would say that my favorite is Tencent Holdings. I think that they've got their tentacles in so many different things that it makes an awful lot of sense to me. I think that they could be a Chinese world company. Certainly that at Alibaba, but it's hard to identify any other Chinese world companies. Whereas you and I could name 200 in the U.S.
And they just made a big investment in Tesla, and just how incredible timing on that. I mean, just before it takes off over 300. I mean, that was a great call on their part. And just alluding to this, you're talking about the four horsemen in China. I'm of the Chinese internet. A big proponent of following the top components in the S&P 500, and I've been following it for years. And you've seen your Exxon Mobil's drop from number 1 to number 2, and now the middle of the pack. GE once was your third biggest component. That's about about ready to drop out of the top 10 components as well. So now you have Amazon, Facebook, and Google. If you take the two companies put together, it's definitely one of the top components. Plus Microsoft and of course Apple. Is there a little worried that just too much concentration in the U.S. market and too small of a group of stocks?
Boy, you highlighted. I think there is a lot of concentration. I wouldn't be worried about it just yet, but we see what happens when the leaders stumble. But the ones, certainly when you mentioned the FANG stocks, they've replaced the GEs. Microsoft
Sure.
has had a rebirth, and the Exxons and whatever as leaders. So you continue to get that rotation in the U.S. Either these companies like Microsoft go through a transformation, or they go by the wayside, like an IBM and a GE. IBM's done pretty well this year, but they have to go through a catharsis in order for them to get back into the game.
All right, now another great point here, and maybe something that attributed to the sell-off yesterday. The Fed kind of talking that the big stimulus that we're going to have through the infrastructure spending may not happen until 2018. Now, much of the recent rally has been based on this big infrastructure investment and jobs and economic growth. What do you see the impact if this infrastructure bill does not go through in 2017? What would be the implications for the overall market?
Well, I think there would be some disappointment. I think that they're anticipating, as you said, some type of an infrastructure program. My view on it is a little different. I say never underestimate the power of the government to either make or ruin a business. And the biggest thing politicians want to talk about is wave about is jobs. And so I think they'll continue to beat that drum, and I think they'll particularly beat it in the drum in the home builders, because nobody provides better what I consider to be semi-skilled jobs as well as skilled jobs. So employment for many districts. So I think that even though it's delayed, I would say that you would see some pretty good action in the home builders, and maybe the big broad infrastructure companies, the floors of the world might skin their knees for a little while.
You went right into your next point, about the U.S. needs more residents and housing, from multifamily up to affordable single units. I mean, really, if you look back at like 2011, 2012, even a little bit later before this market really got going, the home builders did kind of show a little bit of a lead here based on the price action that you are seeing in the home builders, and we can go over these on an individual basis. Let's start out with D.R. Horton here. Just give us your thoughts on that issue.
Well, I think that D.R. Horton is sort of mid-level type it's a perfect example, and one of my favorites. It's not a great yield play. You're not going to look for that as far as what's going on. But the stocks are cheap versus the market, quite a discount. And they did nothing for a while. Now, certainly they've done something this year. They've started to be embraced, of course, by the whole Trump policy. But I think that the thing that you really want to look at from the point of view of the home builders is that they are certainly favored on the policy basis and by a political process. So I consider that bid to continue. You're not paying up more than the market. People kind of felt that they were done after a while, but now they're seeing that the desperate need for housing, particularly, it's the lower cost housing that really moves the whole market up. It's the first-time buyer. And I think that those areas where you see concentration in that are going to do pretty well through the course of the year.
All right, let's talk about the second one on the list, Lennar, L-E-N.
Lennar is a little bit of a carbon copy. I think that one of the things that they've done so well is that they had the moxie to buy land when it was pretty cheap, coming out of 08, 09, and whatever. So, what are home builders? I mean, really, when you think about it, they're companies that, you look at a balance sheet, that own a bunch of land. And in the bottom line on Lennar is that it's got some built-in profits in some of the developments that they're doing.
All right, and the third one, Toll Brothers. Give us your thoughts on that issue.
Yeah, toll is interesting. It's a more of a upper end. I mean, for people who want McMansion or whatever, and golf court development and things, golf course development and things like that. They also have their city infrastructure building. They're doing a lot in townhouses and multifamily. They tend to be higher end, but again, I think the demand for that, as long as we see some type of promise of the economy growing well, should do very well. And again, all of these are at like a 25-30% discount to the market, so you're not paying up. And as a value guy, I have to like that.
All right, and you mentioned dividends, and of course, if we are coming into an interest rate environment, I know I've always favored dividend-paying stocks. Also, my partner Dennis, looking for that yield. I mean, you look at your AT&T, your Verizons, your high-yielding stocks. I mean, they really haven't reacted in quite a negative way here. Do you think that the rise in interest rates is really, if it's slow and incremental, is really not going to cause a max exodus in these stocks?
I don't think so. I mean, you mentioned two of my favorites in AT&T and Verizon. I mean, take a look at the 10-year, and you still have to say, hey, well, I'm almost getting twice the yield in the 10-year. Plus the fact, we all talk about, the whole data technology trends. And, if you're going to have driverless trucks or whatever comes down the line, and we go from 3G to 4G to 5G, AT&T and Verizon are well placed going forward. I mean, for big companies, they could very well have, 4 to 5% growth plus small growth in their dividends. So I think they stay ahead of it. You get the 10-year to trade north of 4%. Okay, well, that would be a different story, but that's a long way off.
All right, before we let you go, Chris, give us one thing here, one thing that, you think if this happens with the Trump administration or policies or interest rates, it's going to be great for the market and we're just going to blast through 2,400 in the S&Ps and go to 2,500. I know that's a tough question, but what's the one thing that would kind of make you sleep a little bit easier at night?
It's a great question. And here's what I think that does it, and this is one that I think people will scratch their heads on. I think that we're going to see an environment of lower oil prices. We need to get this Aramco IPO out of the way. I think Saudi's doing everything they can to keep that oil price over $50 a barrel, and they can do it. But fast, the U.S. is becoming the swing producer, and soon I think the world's biggest producer, and it's going to crack OPEC. But everybody's going to benefit, even, Permian Basin frackers, but certainly all of us as consumers. And that's a big, subtle push. You go to the gas pump and it's cheaper, you're going to spend more on restaurants and clothing, and better for the economy.
And if there's one thing that keeps you up late at night, you're worried about the market, all the money for all your investors and anything, is there one chip that you don't want to see fall that, is just would make you just take a much more I can tell you're a long-term investor. You're looking for yield. You're looking for value when the market's at all-time highs. Is there any one thing that keeps you up at night regarding this market?
Well, I think it's more global political risk.
Yeah.
We could easily have an accident in the South China Sea. Somebody launches a torpedo at somebody or something of that nature, and certainly the whole North Korean situation. I think it's a global event that would cause a temporary black swan in the marketplace, and you've got to keep an eye on that. But for now, I think the market climbs that wall of worry.
Yeah, I mean, that's certainly evident. I mean, you had the chemical attack in Syria. You've had, terrorist attacks. You've had things happen in the U.S., and it's, the market just seems to shrug it off. Is that just the kind of geopolitical environment we're going to be in?
For now, I think you're right. But again, keep your fingers crossed about that.
Yeah, I know.
Sure.
You hate to see things like that happen. Chris Bertelsen, portfolio manager with Aviance Capital, 37 years of investment experience, sharing it with us today on Benzinga's Pre-Market Prep. Chris, thanks a lot. We'll talk to you again soon.
Thank you for having me.
Okay. All right. Here it is now 8:45. Dennis, do we still have you on the line? No, we don't. Okay. All right.
Oh, I'm on the line.
Okay. All right. We're going to take a quick break, and we'll be right back.
Still kicking around here. I don't know how the echo is, but you can try.
Okay. All right. AT&T and Verizon going ex-dividend here. Dennis, could you give us the adjusted prices for those?
Yeah, so AT&T and Verizon, we always talk about the run-up ahead of the dividend and possible, selling. It didn't really happen this morning. We didn't really get a run-up in Verizon. We didn't really get a run-up in AT&T. So I'm not sure it's going to play out the similar way. You get a little run-up ahead of the dividend, and then weakness 2 or 3 days afterwards because they didn't have the ex-dividend day, or they didn't have the run-up that they normally do. That makes me think that they might not have the sell-off that they normally do. But AT&T, if you are trading them, the adjusted close, so AT&T closed at 41.51. The adjusted close is 41.02 because it paid the 49-cent dividend. So it's actually trading up here in the pre-market right now. And then Verizon, if you're looking at that one, paid a 58-cent dividend, closed at 49.02. Adjusted close is 48.50. It really sold off hard though in the last 2 hours, like everything did. So you are seeing a trade up here a little bit, but I'm not sure we're going to play it the same way I usually do. Usually I'm selling the open on these because you don't get the dividend for another 90 days, but because it didn't have the run-up, I'm not going to maybe play it on the short side afterwards.
All right, so let's just take a look at the you had a little bit of run in Verizon here, but it wasn't. Usually, Dennis, when you make those kind of plays, you see a real nice appreciation of a point and a half, 2 points. Whatnot. But
yeah,
here,
if you look last quarter, for instance, this would have been going ex-dividend, would have been, I believe, on just taking 90 days ago, January the 5th. That was the high of the whole move, and it was straight down after that. So, you had a run-up in December from the whole 50 area up to almost $55, a 10% move a month before that ex-dividend date. So that's why I was playing it short side after the ex-dividend date last time, because I had that huge run-up. But, you're looking at it here. We didn't really run up at all.
All right, so let's got about 10 minutes here left in the show. I guess we could do a little imbalance talk.
Well, we got all kinds of stuff we had never had a chance
Let's
to
go
cover
back
here.
to that,
so we
then.
can go to imbalances, but I'd rather go just to a couple earnings stocks that we didn't get to either. KMX, let's just cover the earnings stocks here quickly because these are the ones that obviously are moving here the most this morning. KMX did report this morning at 7:30, 81 cents versus 79 cents, 4.05 billion versus 3.93 billion. So they beat on the top and they beat on the bottom. The stock is getting a little bit of a lift here in the pre-market. Talk about the pre-market action for CarMax, KMX.
All right, there is a rally. Seems to be halted at 59 even here. That is your pre-market high. Let's take a look at the dailies, and really not much at 59 here. Actually, the 59 handle, 58, 59 handle, not showing much. Your 3-day high is at $60. Call it $59.96. Keep an eye on that. Also, 3, 4, 5 highs in the mid $60 handle. But first of all, let's clear 60. Coming back, the stock is just getting off the mat. Nothing but bad news in the auto industry. Earlier in the week, the GM and Ford sales not good at all here. So get through that pre-market high, make a run at 60, and you could have a good day here in CarMax.
Constellation Brands, your other big gun that reported, ST Zebra is the ticker symbol on that, and that stock is trading up because they reported this morning $1.48 versus $1.36 at 1.63 billion versus 1.59 billion. So they beat on the top, they beat on the bottom. Shareholders jump in for joy here. It's up 5% here in the pre-market. Trading at a big critical level, though, $170, Joel.
You got it. You had 170.10. That was your high on October 24th. Just above that, a high of 170.40. Trading right there in the pre-market. I've really seen this thing move, though, on some earnings reports, holding up only a quarter from that 170 level. So chop here through that 170, 171, open skies here. And Dennis, I just want you to know that fizz, man, that thing has not fizzed out at all, even with the market volatility. Dennis, should I just start looking at like the 90 and 95 calls on this thing? If it had this kind of sustained run up, 4 or 5 days of consolidation won't go with what's going on in the market. Is it just only a matter of time before this hits triple digits?
I don't know. This has been, if you were short this thing, there's really been no out. People who are shorting stocks often, get caught like deer caught in the headlights when it moves against them, and then they wait for the pullback. to cover. But you never had a pullback in this thing. You had the gap and go way back when the thing went. It just blew through the 60 handle. It was at $60, and then in 2 days it was at $70. It's just continued to run. Now we're at 85. I mean, this trend is the friendliest trend I've ever seen. I think so. It's hard to fight that. So here we are. You're right. Weak market yesterday. Sure, it pulled back off the highs, but it still made a new all-time high yesterday. It still closed fairly strong considering how weak everything else was. So I don't know how you fight that tape. I mean, even though we had a red candle there, it just shrugs it off and continues going higher here. So I can't fight that tape on Fizz. If it's had a significant down day, then maybe that's the time you start thinking about exiting. But until this thing can maybe take out the low from a couple of days ago, say around $84, it doesn't look like it's ready to fizz out.
I think that the reason that people are not, I mean, let's say you're caught in this short and you have absolutely nothing to do, and then people that think of or taking a short position now, that sugar tax that went into effect in Philadelphia, if that's something that goes into, nationwide, that's really going to hurt the beverage industry and help LaCroix Water and some of the products from Fizz. So some fundamentals behind the move. So when there's fundamentals behind it, sometimes you can throw the technicals out the window. Let's cover some more morning movers.
Costco, COST, big pop here. Same store sales for March were up 6%. Ooh. Stock trading up $3.50 here in the pre-market. Costco shoppers are back.
And pre-market high 170.50, not trading far off that level. What a buying opportunity after last earnings report. Stock left for dead. Really interesting here if you were paying attention to your gap fills. You had a gap between 164 and 166 in January. That might have been earnings as well. Came back. I mean, you couldn't have filled that thing any better for a gap fill. Got off the mat, former resistance at the 168 level. Let me get the pre-market high. Pre-market high is 170.50. If the party can keep going here at Costco, 172 even, or 171.89. That was a high on the gap down day. I believe that was from earnings. So a lot of air to fill between 172 and 176.51.
Let's go to the ratings parade here. Initiated with a sell, AMD, Goldman Sachs initiating with a sell, putting a price target of $11 on it. AMD was actually trading up last night. It was trading up early in the pre-market, and then at 5:30, this sell rating came out from Goldman, and obviously they hit the stock pretty hard. Stock trading down almost 5% here in the pre-market there, taking out the critical 14 support. Now we're sitting here at 13.50. Now the chart looks a little more broken. It kind of looked like it wanted to form a little bit of a cup and handle, but with this big sell rating from Goldman Sachs here this morning, it kind of makes the chart look a little uglier.
So they start coverage of this now with a sell rating. Is that what they did? Is that?
Do you have a problem? Why do you got a problem with that?
I don't know. Just because there was that big cross a couple weeks ago at 1380, where they helped someone get out of a bunch of stock here, and all this activity and all the run up.
I don't remember that. So.
Yeah, I do. I think it was like at 1385, and but I don't know. Just a very interesting call here. I mean, all this activity.
The bold call.
Yeah.
Everybody's bullish AMD. This is a very bold call. So the one thing I'll give Goldman is they've got guts. They come out. They don't care what the street says on a lot of times on stocks. They'll go right against the trend. And the $11 price target, that's significantly below where it is here right now. That's why it's getting hit here this morning. So, Goldman's got guts. They don't care, that everybody seems to be bullish as stock on the street, coming out here with a sell rating on it this morning. You might be on mute.
And just coinciding what's going on with NVIDIA in the last couple days, got up to that 110 level, just hit a brick wall. Now, the downgrade really worked again on that one. Now just hovering at $100. I wonder if they're hitting this here in the pre-market on this news. Not much. Holding up here. So we'll see. Big run in NVIDIA and AMD last year and part of this year. Let's see if Goldman squashes that rally.
Well, NVIDIA here needs to hold the $100 level, and it's good that it's not, when we talk about this, these two stocks seem to move together to a certain extent. AMD, obviously, this is just, a rating change on them, so not on NVIDIA. And NVIDIA got theirs 2 days ago. So maybe AMD is just playing a little bit of catch up here. But NVIDIA is trading up here in the pre-market. So I want to see it hold that 99.50 low from yesterday. It takes that out, then I start to get concerned on NVIDIA, and I start to think about $95. But as long as it can hold yesterday's low, NVIDIA can be okay. But caution, because AMD trading down significantly.
All right, 8:57. We got a few more stocks to cover.
Let's just look at a couple other ratings changes here, then we'll jump to imbalances. DXC, the old spinoff from Hewlett-Packard Enterprises. It's traded only for 3 days, DXC, but we're starting to get some analyst commentary. Kramer kind of bullish on it last night. Well, this morning we've got Morgan Stanley coming out with an overweight on the stock, and the stock is trading up here in the pre-market, 72.27. Not going to be a lot of technicals to talk about on this one because it hasn't traded for very long.
72.64, that's your all-time high. So if you get out of there, that's a breakout to, what did it trade up to yesterday? Yesterday it traded up to 72.64. So hard to do some technicals. If, in fact, it ever goes into retreat here, you can figure your 50% retracement to get a possible support level.
T-Mobile, TMUS, trade down $1 here, getting downgraded at Deutsche Bank. It's trading at 62.55, close to 63.50. Quick levels, TMUS, that'll give me an imbalance look.
Boom. Bunch of lows, just above 62, 62.20, 62.30 level. I'm not sure we're seeing a lot of trades. That's where it's at right now. You hold that 62.30 level, that could shrug off this downgrade. Okay,
imbalances here. They're all small, so I'll say that first. It's 8.55 or 8.59. They're not really growing much here, and the stocks aren't really moving with the imbalances either. Because I'm looking, Bank of America 115,000 to sell. It's actually trading slightly in the green here. I'm looking at Pfizer 42,000 to sell. It's slightly in the green here as well this morning. Twitter's 43,000 to sell. It's slightly in the green too. So I guess nobody cares about the imbalances this morning, at least in the pre-market trade. Again, they're small though, so one institution comes in and these can go the other direction. Usually the ones I'm saying of note are significant, and none of these are really jumping out to me. AT&T and Verizon both have small buy imbalances as well. Both of those are trading up. Sometimes you see those stocks open higher and then leak down again because they're ex-dividend here. I'm not sure because they didn't have the run up this time that I'm going to be playing from the short side, but sometimes that does work, at least from a historical perspective, selling them after the ex-dividend date. Looking, just a couple other ones. Nike, 42,000 to sell. Alibaba, 46,000 to buy. IBM, 40,000 to buy. So that's about the significant ones. But right now, all the imbalances are pretty small.
All right, quick rundown of the S&P 500 index futures. Back up at the 2350 level, making a new high for the session. Hard to pick your poison here if you want to sell into this because we came straight down here. This was based on the 15-minute chart. 23.55, that's your daily pivot. And we had a bunch of closes between right at the 23.57 level. That was the 50% retracement of the move we've had. So looking through some continuation through that pre-market high. Well, folks, thanks for sticking with us this morning through the technical difficulties. Remember, all the thoughts and thoughts and comment on the show are for informational purposes only. Preview for tomorrow. Tomorrow I will be in Syracuse, New York with my daughter Emily, touring the grad school there. So I will be out, but Spencer and Dennis here will be leading the way and highlighting a guest, Ryan Craver of Lamar Group. If you want a great look on the retail sector, you need to tune in for Ryan at 8:35. Have a great trading day. We'll be back with you tomorrow morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.